Guys, let us discuss one of the important standards, SA 520. Before I move into the standards straightway, I will give one example to understand the standards more clear manner. I am conducting a business. I need 1 crore rupees loan. I am approaching a bank. What banker will tell? Please get your audited financial statements. What they will do from the financial statements? They will check my liquidity, they will check my solvency positions, whether I am worthwhile to have that loans. Why they need an audited financial statement? Why? Because it is reliable, relevant. From that data, they will prepare some ratios. They will compare with the standards. For an example, what is the current ratio? 2:1. Liquid ratio 1:1. These are the standards. They will compare with that. Then they will understand I am not eligible for the loans. It's one format I am telling to you. We are CA students. We are learning a lot of management things in our intermediate and final courses. SFM, AMA, all these are the examples. In the context of audit, what is the role of analytical procedures? Basically, we deals with ratio analysis, trend analysis. Lot of things are there. From this data, how auditor will obtain the audit evidence? Ratio also useful here. It's a management tools. In a country like US, most of the audit works are centered around the ratios. Chartered financial analyst, they do better in that. Let us see the discussions. The audit has near end of completion. My vouching, my verification, everything is over. I want to review the work of my subordinate. What should I do? Should I again re-perform vouching and verification? So tedious works. Everything is in order and pakka. Or is there any alternative ways is available for checking whether my subordinate has done the works well? What my understanding to the entity? I had prepared a lot of ratios that I will come soon. So what I will do, I will perform certain analysis, ratio analysis. Ratio is one of the important things. Before moving more details into the analytical procedure, I will give one example, a live example. I was an auditor of a finance company. They are into the foreign exchange business. For quarter, 1 year have. First quarter, it's a loss. Second quarter, it's a loss. Third quarter, it is a loss. But the last final quarter, what happened? The entire financial year, the company became profitable. I checked the GP ratios. First quarter, it is normal. Second quarter, it is normal GP ratio. But the last quarter, the GP ratio seems substantial, huge fluctuations. If the fluctuations has arise, what I have to do? I have to investigate what is the reason for that. Then I understood the owner of the company has given 1 crore rupees as a black money. When they do 2 rupees ka purchase, they will show it as 1 rupee ka purchase. When they sell 2 rupee ka sale, they will show it as 3 rupee ka sale. Ultimately, GP has been inflated. But normal vouching process, everything is in order. Every purchase bill they have maintained in perfect way. Every sales bills they have maintained in perfect way. Nothing I can't detect through the vouching verification, but find out the frauds through the analytical procedures. This is one example. So the analytical procedure is helpful to review the work, to identify the frauds. It is a study, evaluation of two variables which are related. Two variables. See the GP ratio. How gross profit arises because of the sales. It's a part of a sales, isn't it? So it's a plausible variables, related variables. Normal vouching verification, whatever we can't detect, can be detected through the analytical procedure is very important tools. My next question, what time the analytical procedure will be performed? The examples I given is to review my subordinate work. I am taking one more steps to prevent frauds. Any frauds which cannot be detected through the normal vouching process, verification process, can be identified through the analytical procedures. Standard costing is one example. Standard costing. The gold, the ornaments proportion is 91.6. That means 91.6% content of the gold. Remaining is the copper. If that proportion has changed, it indicates the element of frauds. More copper elements comes, purity will go down. So that proportion, when it is going down, people committing the frauds in that. See the public PWC, Public Work Department, PWD. They're constructing a biggest bridges in here in Kerala. What happened? Within a year, it has been got collapsed. Why? Because it lacks the standard compositions. What happened? In the books, they shown the copper, cements ratios, but actually they used the less ratios, thereby they committing the frauds. So this is the main auditing tools for a chartered accountant. Investigate unusual fluctuations. Study two intervariable variables. Any unusual fluctuations arises, that is an indication of fraud. So it is our small discussions about SA 520. Thank you for watching this video and have a wonderful day ahead.